So this one is the blockchain concept. Our moderator is going to be George Nikolaou. He's the Executive Director, Financial Services Innovation for the New Jersey Innovation Institute. George leads the New Jersey Innovation Institute Financial Services Innovation iLab. NJII, right? Okay. Brings together innovative startups that address specific industry challenges and become great value propositions that attract investments from angels and venture capitalists. His career has been around technology and its commercialization, either developing new concepts at IBM Research or developing new markets for IBM and HP, or offering them as consulting services while at Deloitte. Please join me in welcoming George Nikolaou, who is going to be introducing you to the rest of the panelists. Thank you.
Good morning, or is it good afternoon already? I'd like to start by introducing our panelists. So we have Raghav Chawla from Fidelity Investments. He's a director of product management, and he has interest in crypto assets and Web3 and blockchain technologies. We have Angelo Mendola, who is from Priority Payment Systems Local. He's president and COO. We have Micah from Merrill Lynch, senior financial advisor, and Annette Raynor, who is Investview founder and COO. She's going to give us her insights on financial investments and data analysis. So let me start by just introducing the subject of blockchain. I'd like to give a simple definition, if I may. Until recently, when I wanted to give $1,000 to somebody because I'm buying something, I write a check, hand it over, and we both trust that there's a bank that will honor that check and will transfer exactly that amount. Okay. How is blockchain changing that? Get rid of the check, get rid of the bank, get 100 witnesses in the room, 100 of your friends, who are witnessing the fact that you're giving $1,000. Now, from now on, they will testify and they will validate that, yes, that $1,000 transaction happened between George and the other party. For their trouble to witness that and to validate in the future, they're compensated. They're miners. Okay, so those are the miners of the blockchain, these witnesses. Okay. Now, I hope this definition helps, and let me know, how familiar are you with blockchain concepts and uses? Are you totally new to this, or mostly new? So, okay. So there's a number of people who are totally new. Maybe there's some who are already familiar. Okay, great. So let's start with some questions. And can you hear me okay? All right. Good, thank you. So let me introduce the first question to the panel. So what is the relationship between blockchain and IoT? After all, this is an IoT conference. So what's the connection between the two? You want to start?
Sure. So I kind of see two broadly speaking, two points of connection between IoT and blockchains. So the first one is, if you look at a blockchain as this decentralized data store that nobody controls and that's completely trustless and immutable. Basically, when companies are selling you IoT devices, there are some cloud services that are associated with that. So the device is writing some data back to the server of the company that sold you that device, and they allow you to read some of that data by logging on through a website to their company portal or something to look at the data that was produced by that IoT device. Now you could actually replace that centralized server of that company with the blockchain, so that the IoT device instead is writing directly to a blockchain. Now the benefit that gives you is if the company went away, if a company sold you a device in today's landscape and it went away, then it kind of becomes useless because all the software services that came with it, the back-end services, are gone as well with the company. And so now you have to buy a new device essentially from a different company. Versus if it's writing to a blockchain, the company could go away, but the device keeps functioning forever because the blockchain is going to be persistent and be there forever. So that's one side, and the other side is the payment side of it. So what cryptocurrencies allow you to do, blockchain-based cryptocurrencies, they allow any human or artificial agent or device to actually create an account for itself without having to go through any sort of paperwork or KYC process or anything. And so every IoT device could essentially have its own bank account, that's a cryptocurrency account, and then it could trade with other devices, and you could have a whole digital supply chain where devices are talking to each other and purchasing services or data from each other.
Yeah, just to continue on the second part, when it comes to making payments and delivering payments and accepting payments, picture the IoT device or any device that you're using to exchange a payment, keeping a ledger of that transaction. So it relates directly, blockchain and IoT are directly related to each other. It becomes a way of us managing who and what was paid for and by whom, and understanding that the transaction is valid because of these witnesses, right? The miners who are watching this stuff. So you do need devices to watch this stuff. It's not written in books, it's written on the blockchain. So as I said, it's directly related.
Micah?
I would just like to add to that the largest issue we have today in the Internet of Things, as you can tell from today's conference, is security. Cybersecurity is our biggest concern. The protection of individual data is of the highest importance. Individuals now are demanding protection of their information, and what the blockchain represents is the ability to verify transaction while maintaining the anonymity of the parties. And so I can participate in a transaction that is verified by the blockchain technology, not using any information that is identifiable back to me. And when you consider the amount of compromise that has taken place of individual data over just the last few years, the blockchain represents a significant opportunity and something that we should be looking at very closely, not just from a perspective of cost of financial exchange and how we could reduce those fees, ease of transactions, and the benefit and the security associated with this decentralized verification system, but we also have to look at it from the standpoint of protection of information.
The last thing I'll add to that is the Internet of Things. We all want efficiency in everything we do. We want to maximize your hard work for what you get in return. And they have all said it very clearly, and I'll say, maybe you've heard of things, smart traffic systems. IBM has worked on those things. It would be smart streets, actually pavement and street lights, being able to communicate back to City Hall that there's a malfunction or that there's a pothole forming, road hazard. In being able to communicate and log this data accurately, it's going to, just on that scale of a municipality, it's going to make the municipal funding of these services that we all have, our roads, our lights, our traffic systems. We all want to reduce waste. We all know that we want to protect what we have, and the blockchain, amongst these many other things, it offers the ability to not only protect it, to log it accurately, to be able to verify it from multiple points, and then to accurately determine what action is needed next. It's a great thing.
Okay, thank you. Well, I made an introduction before saying what blockchain is, and I gave a very simple example, but going from that simple example to how it can be used in real life, it's a leap of faith, and it's a big distance. So let's see if we can discuss a little bit what are the use cases that are the most impactful and the most relevant to day-to-day life of blockchain. And let me offer a few examples just from the discussion. Is it the fact that we can take a legal contract and represent it in a blockchain? Is it the fact that we can track where a salmon was fished and which supermarket it was bought from? Is it maybe cryptocurrencies that we can speculate on? Is it the identity that can be established uniquely for every individual on the planet? Or is it medical information that can be preserved on a blockchain? What do you think might be the most compelling use cases? And maybe we can start with Annette.
Oh, thanks. I think right now it all depends on who you are. I think you have a different perspective if you're an individual versus a business, and I think you'll further have a different need depending upon your knowledge and acceptance level of what the blockchain and cryptocurrency is. If you're a business, you're interested in and you want to do business globally, you are very interested in how you're going to exchange payment for goods and services around the world. And that is a very expensive proposition built into your profitability. Cryptocurrency is a way of transacting in the same currency, minimizing the fluctuation on the transaction. And so if I'm a business and I want to do business with someone in Germany, and we're both dealing in the same currency, if you will, and in this case it's cryptocurrency, I'm dealing in a variable now that has reduced fees associated with it. I could preserve some of my profit margin. However, I still recognize that there's volatility in the value of those currencies right now because they're not fully adopted and they're just emerging. Nonetheless, as a merchant who wants to do business around the world, I'm paying very close attention. As an individual, I'm coming at different rates of speed. We've noticed that the younger generation, the millennials, have not only accepted it, but now that is their point of reference. I want to be able to effect a transaction with no fees, send it to my friend, and not deal with any banks. Fill out a form? Why would I fill out a form? I should be able to do this on my phone just in seconds. If I want to send Joe whatever I want to send Joe, why is it anybody else's business? And why are you asking me, what it's for and who I am? So this is what that generation expects. For the rest of us, as we start to get our head around the fact that we don't need a central physical business, bank, monetary authority, if you will, to verify, record, and manage the transaction and the transfer, and that there is this protocol that sits out there that lets you effect the transaction, and these independent parties, which are called miners, verify those transactions, and there was no bank or central authority involved. It takes a little bit for us to get our head around it. But I would suggest to you, if you're at that stage, think back when the internet first came out and you said to someone, explain to me what this is. And it may very well be, even to this day, you don't understand the layers of the OSI network model and how it made communications available and how we could start to do things differently. You may still not have that technical understanding, but I can tell you, being in technology since 1983, this represents that very same ability. It's the next evolution of what we can use technology for and really change the way we do business.
That's an excellent point, and I'll go back to your examples. I think it's all of the above, really. Yeah, just out of the many examples you pointed out, just think about the gain you mentioned in terms of health records and insurance records. Somebody probably has the statistics on how many lives are lost due to inaccurate medical records, lag time in accessing those records, misdiagnosing or not diagnosing quick enough, and then verifying insurance coverage to some levels. Can you imagine just what it would do for human life to be able to, instead of having those medical records written on a clay tablet, stored in your mind, written on a piece of paper, have it immutably stored, able to be accessed, verified, multi-source, as well as that person's insurance coverage who's entering the emergency room, and the doctors and their team around them being able to make much faster, much more efficient and accurate decisions. The ability to prove the accuracy and the accessibility of what actually happened, the knowledge that we gain and sometimes lose now, it's across the board. And you pointed out many examples of where it would improve, every aspect of our life.
Yeah, I mean, look, everything that has evolved, and when it comes to our technology platforms, there's always the word exchange in it, whether it's your email exchange or information exchange, and now we have this decentralized exchange of anonymous transactions, right? It's the blockchain. The blockchain is recording this. So to Micah's point, every example that you mentioned is a use case. And that's just the beginning. And there's going to be millions and millions of different use cases for a blockchain. And the blockchain isn't the only exchange. There are multiple. And there's going to be a medical exchange and a legal exchange. Because what's going to happen is, to Micah's point, and to everyone's point actually, in our last panel and today, we keep reiterating the words efficiency. So we're going to keep growing and developing and getting to a point where we're getting more and more efficient. The theme of today, a lot of the speeches this morning, we're talking about cybersecurity and how we can protect our businesses and ourselves personally. Our data is like the most precious thing in the world to us. It could ruin your life if your personal or business data is breached. Now imagine having your financial data breached on every transaction. The world is kind of going that way. I'm a member of a few different credit facilities that monitor my credit. I got an email the other day saying, hey, we found your information on these 7 websites. Some of those websites were LinkedIn, Facebook, my banking site, sites that I used to use, the same login and password for all of them. Imagine being breached on my LinkedIn, my Facebook, and you can literally impersonate me in the world and no one would know. They could pay you as me, they can instant message you as me, they could even act as me as a professional in the business I run. It's scary. But now having an exchange that kind of makes it impenetrable, unmutable for everything that I just mentioned, plus legal, medical, making these exchanges on here is the use cases are going to grow every single day. Someone's going to figure out another way to use this thing because it's that important to get to that level of efficiency. I just want to add that.
Yeah, I think I would agree that it was all of the above. I think the way I think about the disruption that this space will cause, it's about 6 or 7 broad categories. And the first one, of course, is just money. So for the most part, money that people use in the world today is fiat money issued by their local central bank and government. So this one is probably the least not very relevant to people in this room because the type of money that you use to conduct your day-to-day transactions with is the global reserve currency. But in countries where you have hyperinflation or you have capital controls and you can't get access to your own money, it becomes very appealing to have a form of money that's not controlled by anybody, which is cryptocurrencies. In a similar vein, there's just transactional mechanisms and like payment methods. So, using a cryptocurrency, when you transact, you also don't have any sort of intermediary, so it's directly peer-to-peer. Versus if you swipe your credit card at Starbucks, for example, it's not just Starbucks that's, party to that transaction. There's like all your, there's 7 different companies on the way that like are, getting your personal information, as you talked about. So that's kind of a risk to you, and also just overall very inefficient because you have these trusted intermediaries that are clearing the payments. Versus with cryptocurrencies, they're instantaneous, or near instantaneous. And then you also have like non-currency sort of blockchains, and these are often known as utility tokens. But basically, you have decentralized ways of accessing compute power and file storage and stuff like that. So that's another sort of area of disruption. And there's this concept of distributed applications or decentralized applications. Essentially, using these sort of decentralized versions of payments and compute and storage, et cetera, you can actually build a decentralized version of any internet service that you use today, and people are actually building these right now. For example, like Facebook or Google or Uber or Dropbox, any of these services, you can have blockchain-based versions of them that are not controlled by a central company like Facebook or Google or Uber. And this is where you're seeing all these like tokenized assets that are popping up on exchanges, and there's a lot of trading activity there. There's also purely security tokens, so the process of issuing a new security and raising public money, where it used to be you went to an investment bank and you got all your IPO stuff done, and it took you 6 months and millions of dollars to get that done. you can now just push a button and issue a token and do a public offering. There's definitely a lot of legal concerns there, and the SEC and CFTC are working together to kind of figure that whole space out, because some of these things are securities and some are commodities, et cetera. But so that whole sort of capital formation space is being disrupted in some sense as well. And then, you know, you talked about smart contracts, so that's another sort of, a lot of legal services can be entirely automated because you can have code that self-executes and that can conduct and transact value. So anything that you could put in a regular contract, you can do it code form and deploy it into a unstoppable code execution environment and have that sort of self-execute when it needs to. And then you have the blockchain as a decentralized database system. So, you know, there's a lot of work happening in supply chain, healthcare, financial services, where any industry process that you have, any sort of entity that's playing the role of a trusted third party, you don't need that anymore because you can just have a blockchain play that role. And then also you talk about identity. So I think self-sovereign identity is something I'm very interested in, and so that's another thing where you know, you can have secure identity mechanisms that are, again, not issued by the government, and so that empowers people more.
Thank you. Well, since we have a panel that's heavily biased towards financial industry, let's see if we can tap their expertise to look at the risks and rewards of looking at investments in the context of blockchain. And obviously we're talking about cryptocurrencies is a big part of that. So there are risks there because of the fluctuation in value, you can lose everything in an exchange that gets hacked and so on. But there might be rewards too, because, you know, we know Bitcoin went from less than $1,000 not too far ago and to 14,000 and back to 6,000. So obviously there are risks and rewards, and maybe there are new opportunities. Maybe you can tokenize a lot of assets that are illiquid right now, that are not traded. Houses in countries that do not have a land registry, for example, you know, land or property in countries that do not have a land registry, and suddenly you put them on blockchain, you can trade them. So what is your view on the risks and rewards of financial investments in this context? Annette?
So if you're a little bit older like I am, you would look back at 2000, and of course everyone rushed into the internet market to say, I need a piece of this. And of course that created the dot-com bubble, where all of those investments and those dollars that rushed in, let's just call them fear of missing out, right? Everyone was afraid they were going to miss this chance, and they rushed in and ultimately lost a lot of money. That same proposition exists right now today with this emerging technology, because it's not just a currency, a form of exchange, it's also, at the same time, a technology that represents the ability to apply it to so many different things, that investing in businesses that adopt it, you know, is one way to benefit. Then there's the ability to actually trade the currencies themselves. Or we talked about the blockchain and the verification that takes place, and miners do the verification right now. You could be a miner. So there's a multitude of ways for you to participate in this emerging market, because it's more technology and market. But you have to approach that with reserve, right? As we look to the past and we see some of the mistakes that were made in the past, you have to go cautiously, but you have to go with an open mind, because it does ultimately come down to, when someone says to me, is it real? Will it be there? Demand is what drives what's real. To the degree that people demand that this is how we're going to do business, if I demand that my exchange fees be kept low, if I demand that I can pay in Bitcoin or Ether, then that will drive the behaviors of the suppliers. And that's where it all rolls back to the efficiency, right? How efficient can we be in affecting a transaction and providing services? So there's a lot of ways to participate, and it doesn't require a lot. You know, I just would ask everyone to remember about that frenzy, because some people invested in the right companies, right? If you happen to pick eBay or Amazon at the time, which Nobody knew really what they were. There were people who invested who had no idea what the company was even about. But likewise, there were so many that went out of business right away. So you have some opportunity here, but you are doing the right thing. You're sitting in a room to learn about it. And that's exactly what you need to do so that you can understand it, because you're an integral part of where it goes.
Right, to that point, Annette's last comment is exactly the truth. There's risk and rewards in everything. You know, today, we take for granted that you can go on your phone and download an app and you can trade stock today as long as you have funds available in your bank account. We take for granted that you can go to any store and pull out a little plastic card that's 3.5 inches long and 1.5 inches thick, and you can say, trust me that I have the money and I'm going to pay this and I want my coffee or TV or whatever it is. And then you trust that a credit card processing company is going to tokenize your information when we take it from the merchant and process that transaction and encrypt that information so you're unhackable. Same principle lies in using the blockchain. You know, we always tend, in the last panel we did the same thing, and everyone wants to know about the cryptocurrencies and what am I missing out. And Annette's point of the internet bubble in early 2000s, late 90s is exactly that. You know, there's a lot of unknown. There's probably thousands of experts that are speaking on the blockchain and cryptocurrencies every day. There's blogs that are just running right now of people giving their 2 cents. And there's some people who are making billions of dollars doing it, and some people losing hundreds of thousands of dollars trading. The difference between them is they educate themselves, you understand what your risk level is, do your research specifically if you're going to trade. And I'm not going to give you advice, or no one on this panel is going to tell you to go buy Ether or Ripple or Litecoin or Shipcoin. We're just not going to do that because, to be honest with you, I think there's a level of unsurety within all of us because of a level of research. The advice I would give is take a look at them all. Understand the coin and what it represents. Understand the crypto, and if it's backing a banking platform, read up on that banking platform. If it's banking a logistics platform, look up that logistics platform. Make your own assumptions and understand that there's always a risk. You know, you could be the best financial advisor on the planet. No one's batting 1,000 doing financial advising. Just take that for what it's worth.
Yeah, and I would just add to that. So I mean, I think this analogy with the internet bubble is very apt, and I think if we keep that analogy, we're probably somewhere around the early 90s as far as these blockchain and crypto companies are concerned. So just like back then, there was this fervor, you know, a lot of fervor around all sorts of innovation, and all sorts of companies were created. Most of those companies died, but from that activity, we also got the Facebooks and the Amazons and the Googles and the Netflix, which created a whole lot of value. Right? And so right now people are trying to, one, understand what this whole thing is. They're trying to, like I said earlier, create decentralized versions of these internet companies that already exist. Some of them make sense to decentralize, some of them don't. Some of them will work, some of them won't. People are doing all sorts of other type of activities that are unrelated to replicating a decentralized version of internet companies. People are creating new currencies. There's all this activity. Also, I said it's really easy to create these coins. There's a lot of just straight up scams and frauds out there in tokens. So you have to be very discerning, but yeah, it's high risk, high reward. And so if you're able to pick the right ones, you know, a decade from now, you probably generate a lot of value, but majority of these coins that are out there today will probably not generate a lot of value. So it's high risk, high reward.
All well said. I can't add much to that other than I'll rephrase it another way and quote Ben Franklin: an investment in knowledge truly pays the best interest. And I'll follow that up by Warren Buffett. When promised quick profits, respond with a quick no. So.
Since, you know, we're running a little bit of time, I'd like to invite any questions you might have from the audience, so that we're addressing what's on your mind. Please.
Thank you all for being here and sharing your thoughts. Without a doubt, we could be sitting here entire day, maybe the whole weekend. There's a lot to talk about around both cryptocurrency and the blockchain technology, right? So a couple thoughts come to my mind. Why change? I mean, systems are working fine. Identity theft has been around for a while. We keep enhancing, securing our systems. What you pointed out, I really liked it, that when you're doing a transaction, a commercial transaction, your identity is protected, so it's almost like a cash transaction, right? So today I walk into a supermarket or an auto dealer and say, well, here is a $50,000, in cash, and give me my Mercedes-Benz, or a $2, gallon of milk. There is no identity exchange, right? So practices and things are already in place. Speaking of Facebook, Amazon, eBay, etc., they all added new stuff. I'm just going to call it stuff to our lives, right? That didn't exist before. Uber, on the other hand, did disrupt an industry, a practice that has been around for many, many years, right, in the US and internationally, and it has created a lot of ripple effects. With blockchain, and specifically the application in cryptocurrency, is asking for change at fundamental level in everything that we do, right? Yes. And frankly, I mean, any commerce transaction, as an employee, you get your paycheck. As a citizen, you're paying taxes. Everything will get disrupted. So I have to ask you guys this question. Why change? I really don't see any compelling value in this technology that it's offering us today.
What's the benefit?
What is so compelling about it?
It's a great point. I'll try to be concise. Just say MIT estimates that by 2040 to 2050, the world's energy, fiber, food consumption is going to double over the levels demanded in 2010. So in about a 30 to 40 year time span, we're basically going to be consuming more raw materials than 7 billion people were in 2010. What does that mean? Ultimately, those people are your children, your grandchildren. There's somebody's children that are about to be born. At that time, there'll be about 10 billion people on the planet. We all know about the poverty level, billions of people below it. So what is the purpose of it? Just as in history, say in the 1900s, when there was inefficient currency systems, thousands, millions of bushels of corn sat in the field and rotted because nobody could figure out how to finance the movement of that corn out in the Midwest to the markets in New York City and then shipped over to Europe, where thousands of people, millions of people were starving over there. It might be a conundrum that we're caught in, but the rapid growing human population, and we are energy systems, demand that we figure out a way to finance or meet that energy demand. So what this is the natural evolution in the way in which the barter system finally met its match and it couldn't work. We needed a more efficient medium of exchange in order for humans to thrive and have better standards of living. We are at a time now where there are so many of us on the planet and we're so interconnected, we have to improve the efficiency of how energy and how transactions, how data, how accurate we are and efficient we are. We have to get more efficient in the current system for human beings to continue with the standard of living that we know today. And especially if we want to continue that and then actually raise the people who are living below the poverty line, raise them up above it. But it is clear in the biological sciences, every system and physics has a carrying capacity. One thing will give, either we will become more efficient or we, or human beings, will not be able to continue to increase at the rate we are, our population, and the rate of energy consumption that we're currently accelerating. So we need more efficiency.
And I just want to add on to that, the more immediate, because that's where we're going, but we already see the signs now. We're being called to do business globally. Now, if we would just want to set our sights on the United States, we're a very fortunate country in many ways, certainly when it comes to our money and its value and how it plays. But if you want to exchange on a worldwide basis, cryptocurrency represents the opportunity to do that. And to the degree that we as a country pay close attention and participate and support, you run the risk of not adopting, yet the rest of the countries around the world do. And I would ask, what is the cost of not changing?
Another question in the middle there.
This is all very interesting. I'm definitely very close to being a millennial, as you can see, but we have a lot of young folks in our firm who, this is the hot topic. Everyone's talking about, we have interns coming in talking about it, and somebody like myself, I like to do the research so I know what I'm talking about. So mind you, right now I don't. But I do, Annette, you were saying some things that I can see some benefits to moving to this. But I think right off the top of my head, I wrote down like security concerns, money laundering, like without having, for the blockchain, knowing who those parties are involved. What are the legalities that come up and the issues with controls and governmental controls that could then falter if we don't have that, if we have that anonymity, which is great in some situations, but in others a concern.
I would tell you that right now, that's exactly where we're at. That uncertainty is causing the instability in that entire environment. Regulation is being sought. In some cases, too much regulation can undermine and ruin the program itself. And it requires both regulators, government, as well as individuals, I think, to start to look at things not as we have them now, but to learn how to look at things as they could be. And when we talk about fraud, while I tell you that the blockchain is secure, it is the movement in and out of the blockchain is where I see the biggest vulnerabilities. If I need to take my coin and get it back into the banking system, that's where I face vulnerability. Who's doing that exchange? Who's doing that transfer? And so I would like some protections there, right? But I also don't want it so heavily regulated that it now becomes cost prohibitive, which is where we are right now. So I think that we need to look at this forward moving. And I think that we really need to open our minds so that we can take advantage of the opportunity, not just from an individual level, but from a national security level, a government, a country, a banking system. And I think to the degree that all of those areas adapt, you can really become very powerful very quickly. And I say that both as a positive and a cautionary negative, right? Because I think lack of knowledge and lack of participation is a dangerous place to be. I do, that's my opinion.
Any other thoughts on this?
Yeah, I can add a thought. So basically, I mean, if it's harder to control and monitor all the transactions and the stuff that are happening on cryptocurrencies, but it's the same. Cryptocurrencies are basically digital cash, and so just like a lot of nefarious activity occurs on cash as well, you don't say that let's just not have cash anymore. So it's similar with cryptocurrencies. And as far as in certain cases, and this kind of goes a little bit to the previous gentleman's question as well, where to really see the value of this, you got to think of it globally. And you're fortunate enough to be living in a country where the currency that you use is the global reserve currency, so you don't really think about too much about currency fluctuations. You also live in a country with probably the most robust and trustworthy financial services you could get anywhere else in the world, so you don't really think about that. But go to Argentina, go to Venezuela, go to Zimbabwe, where they've experienced hyperinflation, and ask the people who were losing their life savings at the rate of 800% a year, and be like, how would you like a money that wasn't controlled by some central banker that was, did something that was not related to you at all, but made you lose all your life savings? And how do you like a more stable form of money? Or go to Greece or Cyprus when there were bank runs there and people weren't allowed to access their own funds, or even China that currently has capital controls where people can't spend their money the way they want to. So for those people, as of today, the cryptocurrencies offer a very, very, very valuable service. In the US, you don't see it as much. And then as these technologies mature and get adopted more, Annette talked about how just the overall efficiency gain that you get in the system, that's when the value will start looking a lot more appealing even to Western nations. But currently already it's providing a lot of value to people like that. And so.
Please.
So there was quite a bit of conversation about efficiency. I've heard the word come up quite a few times. So let's talk about efficiency. And let's also talk about, is this a current day issue and will it be fixed? So Angelo, you guys do tons of credit card transactions. Visa, MasterCard can process, I don't know what the number is, but it's big. Let's make up a number, 1 billion transactions a second. I think, was it Ether, I think? Because of cryptocurrencies, it like broke down because there was too many crypto kitties being bought at any given time or something, right?
Yep.
Does that sound about right? So,
CryptoKitties.
and your analogy about the people in the room, okay, we have 1,000 people in a room. What about when you have 20 million people in the room? When this chain, this ledger becomes really, really big and bloated, and everyone needs to validate everyone's transaction, or maybe you have these, what are they called, the spin-offs or whatever. Is this really more efficient? Or at some point does it, maybe when you have everyone voting on the validity of a transaction, this becomes a very crowded, noisy, slow room?
I mean, I look at it like this. In today's world, you mentioned, Visa, MasterCard, the value of the brands. So we call Visa, MasterCard, Discover, American Express brands. But what they actually are networks. They, within themselves, are inefficient blockchains. They have these databases that verify, approve, or decline transactions. That's the network. Your bank card that says, Capital One Visa, Capital One holds your money, Visa's the blockchain. That's its simplest form. It's inefficient today. And this is speaking from, an industry expert. I was an industry expert 5 minutes ago. While I was sitting here, I'm not an expert anymore. That's just how it works. It's inefficient today. We tokenize transactions at Priority, every single one of them. We're no longer using dial-up transactions. We've had systems built, APIs direct to the card brands to verify transactions in real time, provide real card data, and it's all the latest and greatest according to the PCI DSS Council, right? They come up with these rules and regulations, and this is a regulated council behind a regulated card brand in a regulated banking system. I think the biggest fear, well, let me go back to the efficiency part. So it's inefficient today. There's too many layers of where a transaction processes through.
Aren't you still way faster than these blockchains? I mean,
Today,
like,
the first credit card was issued in 1972, I think.
so it might be a matter of time, you're saying.
Yeah, it's a matter of time. So the efficiency part is today it's way more efficient than it was, last year. Contactless payments came about. They were way inefficient when they first came out. No one was using Apple Pay or Google Pay, Google Wallet. Now today adoption is 13 times higher than it was last year, and it'll continue to grow. Same thing will happen with blockchain technology and the use of cryptocurrency. I mean, that's my opinion, and it just looks that way. Is it certain? I don't know. But I do know that it is way more efficient, and I can see a world where having verifiable transactions and decentralizing where those transactions are being verified from, the biggest fear is that it gets over-regulated and re-centralized, and someone wants to have this central power of decision-making. That's the fear. And if it goes that way, it completely ruins the basic principle of the blockchain.
So just to add to that, so a centralized database will always be more efficient than a blockchain for anything, because essentially if you think about any transaction processing as a read-write operation, you'll always fundamentally, theoretically be able to write faster to a centralized database than to a blockchain, just by the fact that blockchain has to have to replicate that data, transmit it across the network, and reach consensus. That'll always be slower than just doing a single write operation on your centralized database. What makes it more efficient overall, though, is a number of things. So the perfect form of government is a benevolent dictator, but nobody really wants that. So the perfect form of global payment network would be a single company that has a single central database that manages every transaction, and yes, that will be definitely more efficient than any blockchain solution. But you probably don't want that, because then you're relying on the entire global financial system to basically reside on that one server, so that causes a lot of issues. What's happening in the world today right now is that you have all these different companies, and I talked about that Starbucks example where there are 7 institutions like payment processors, card processors, correspondent banks, and blah, blah, blah that are in the system. And so they're all writing to their databases. They're all then, doing reconciliation processes, et cetera. So even though to the end user right now, whether you use Venmo or this or that, at the end of the day, it seems like you're getting instant payments. In the background, it's taking like T+1 or T+3 or whatever time to do all that process. So from that systemic, like the overall system standpoint, this is more efficient because it's directly peer-to-peer. And yes, this transaction will take 10 minutes to write on the blockchain versus if you wrote it to a centralized database, it would take like 1/10 of a second. But to actually say that the transaction is complete and settled, this is done within that 10 minutes, but that will go through all those intermediaries and take a couple of days. And then also there's that, additional risk of all your data, your name, your address, your account, et cetera, is going to all these institutions as well. The fact that you made these payments, like, your activities can be tracked as well based on where you're making payments. So all that kind of goes away. So that's more efficient that way. And another thing from a pure technology perspective, I'll say is, while, the centralized database is always going to be the most efficient, and if blockchains are here right now, they're very quickly getting much closer, and there are things like layer 2 technologies, like Lightning networks, payment channels, Plasma, you can look all these things up if you're interested, sidechains, and they make the transaction processing on blockchains way, way more efficient than they are today.
I want to add one thing to that. So you speak centralizing a payment technology. Today's payment technology is centralized, but multi-layered. We ask for something called immediate satisfaction. We go and buy something, we hand our credit card over, and we get our product. So that immediate satisfaction, we think we're running at a fast speed, but you're still running at the speed of trust. And that trust is that my issuing bank, through that network of that card brand, is going to send the money to that merchant's processor and then deposit into the merchant's bank account. We trust that system. We don't even think about it. It just happens. And many of you may not even know that's the way it worked, but it does. And it is a level of trust. That money actually doesn't move for another 48 hours. And it's not even money. It's like an electronic code that got sent from one institution to another, and then on someone's computer banking system says that you have that money. So the efficiency, I think, and it helps in my business because I see us one day actually being a level of verification and depository. The biggest problem that exists today is how do I get the money out? And the processing of those transactions and who gets what fees and what path is it going to get from here to here, and from this, whether it's a tokenized payment code or a cryptocurrency, if it's yen or euro or pound or dollars, and where does it have to go? Where's the destination? That's where you still need payment processors. And that's why I know the longevity of my business will be there, because someone needs to do that.
Okay, thank you. So on that note, I want to thank George and the panel, because I just realized we're going up against lunch, and lunch is out there. So thank you very much.
Thank you,
everyone.
everyone.
Please stand for the panel. Thank you.